A lot of clients ask us what's the proper amount to be contributing to their 401k plan. And that's really tough because everybody is unique, right? Everybody's circumstance is different. So make sure that you speak with your advisor to get personalized advice and guidance on this. But essentially, at the very minimum, we want to be getting the employer match. The employer match is free money that they're going to be depositing into your account. So we want to be doing at least that, right? The free money into our account. But usually we need to be doing beyond that to save for our retirement, right? Fewer and fewer of us have pensions that we can rely on. So the onus is on us to do the savings. Because of that, we want to save more than just our employer match. There have been many studies that have been done that ask that specific question. What's the right percentage to contribute? Lots of studies have said that magic number is 15%. But again, that's a cookie cutter number. Does it apply to you specifically? Hard to say, but it's a wonderful goal and a wonderful target to try to achieve, is that 15% of our salary going into our employer plan. Now, of course, you need to look at your own budget, your own expenses to see if this is doable, but also if it's enough. Right? Everybody's retirement is going to be different. So is that 15% going to get you where you need to be in order to be able to live a 20, 30, or maybe even 40-year retirement? Something else that's important for you to think about is what kind of 401k you want to contribute to. Most employer plans have options, and not a lot of employees understand that. There's usually a traditional 401k, and more employers are getting on board with the Roth 401k. So we need to reevaluate where we're contributing and the impact of that choice on our retirement. So traditional 401ks and Roth 401ks have the same contribution amounts, and it's a combined contribution. So you can split it, some in the traditional, some in the Roth, all in the traditional, all in the Roth. The great thing about Roth 401ks is that there's no income restriction, where Roth IRAs do limit who can contribute based on your income. So I could be making $1 million a year and still contribute to the Roth 401k plan. So that's a wonderful thing to understand. People that are restricted externally can do it inside of their employer plan. But the contributions matter in terms of a tax deduction today or no tax in the future. That's what we're balancing when we're making this contribution. Do I want to pay tax now or do I want to pay tax later? Traditional 401ks, you're gonna get a deduction. It's pre-tax money. That money is not taxed when you're putting it into the plan. The money does grow tax deferred. You don't pay tax as it's growing. And then in retirement time, when you take the money out of a traditional 401k, you pay tax on on every dollar for federal and state. So full tax on that traditional 401k. The Roth is the reverse. When I make a contribution, no tax deduction. I'm paying the tax on those contributions today. The money still grows tax deferred, just like the traditional 401k, but when I go to take the money out, every dollar is completely tax free. Why not hedge against taxes going up and have Roth money? Why not have money that's going to be taxed differently in retirement time? Not to mention, traditional 401ks have required minimum distributions, and Roth 401ks don't. Not to mention that traditional 401ks, since it's taxable income to you, they're going to impact your Medicare premiums. Medicare premiums, I'm sorry if I'm breaking the news to anybody, I really hope I'm not, but Medicare premiums are based on your taxable income. The more taxable income you have, the higher your Medicare premiums. So if I'm taking a distribution in retirement from a traditional 401k or a traditional IRA, that's going to increase my Medicare premiums. Roth dollars do not. That's not taxable income, so it's not going to impact what my Medicare premiums are. So why not have the flexibility? Why not have money that's taxed differently for yourself? Something to consider, right? It's important for us to understand the impact of our choice today. So consider, if your employer has the Roth 401k, I highly recommend that you consider contributing to it.